Good morning, investors and traders. This is Naeem Adam. So the big question for investors is that what is going on with the stock market? Because when we look at the price action, there is clearly a one big bearish signal which is formed for the S&P and for the Dow Jones Index. And for those of you who don't know what the S&P 500 is, S&P 500 Index represents the top 500 companies over in the United States. Similarly, for the Dow Jones, it is the top 30 American companies. And the third biggest index for the US stock market is the NASDAQ. And as we know, the NASDAQ is your tech-savvy index. But the question is, okay, why there is this big bearish signal? So when we talk about the bearish signal, that means that the stock market is likely to move to the downside. And when we say bullish signal, that means that the stock market is really going to rise to the upside. So these are the primary factors that we are really likely to see with respect to the US stock market. What we are seeing for the US stock market right now is that the prices have started to drop below the 50-day moving average. Now, if you are wondering what is 50-day moving average, Naeem, tell us a little bit more about that. 50-day moving average is basically the average price for the S&P or for the NASDAQ or for the Dow Jones over the 50-day period. So that is just the average price. Institutions and traders, they do pay a lot of respect to this particular moving average, because if the price trades above that, for them, this is a representation that yes, the stock market is likely to move to the upside. But if the stock market falls below that, then this indicates that, look, the bulls who are likely to push the markets higher, they're losing control, and this indicates that the stock market is going to move to the downside. One important factor that I wanted to explain to you guys is that so far, since the coronavirus has hit this market, this pandemic has completely brought this huge turmoil for this stock market and for the global economy. It was only the fiscal and the monetary policy. These two policies have supported the stock market and, of course, the global economy. Now, what do I mean by the fiscal and the monetary policy? The fiscal policy is like how we had a bounce back loans. Over in the United States, we had a stimulus aid package. Government introducing new legislations to support smaller, medium, or larger size businesses. So those policies are known as fiscal policies. And then we have central banks, which control the interest rate. Because remember, if the interest rate payments go up, that means that the stock market is likely to react to that news as not as a good news. Because when interest rate payments go up on our houses, we know we have to pay more for our mortgage repayments. Same happens for the business loans as well. So what the central bank did, the central bank reduce that interest rate, and what that helped for this stock market to rise. So today, what we are expecting is we're expecting more information from the US Central Bank, which is known as the Federal Reserve Bank, to give us a bit more information, because we know Donald Trump doesn't want to support another stimulus package. The expectations were that he would, right? Because that would absolutely make sense. Because if Donald Trump supports another stimulus package, then it was certainly going to help him to become the US president again. And that was the anticipation. He will send the free checks, another stimulus checks to Americans, and Americans will take that check, and they will support Donald Trump. And of course, those checks which will be going, or which could have been gone to the American public, they would go and then spend that, just like how we've seen over here in the UK during the furlough scheme. People were sitting home, they were still getting their wages, and people started to renovate their homes or started to do a lot of other stuff, which helped companies like B&Q and several other companies over in the United Kingdom. And similar thing happened over in the United States. So we've seen, house building stocks, house builders going up. So today we are going to hear the same thing from the central bank as well. Is the central bank going to do anything? Is the central bank going to reduce the interest rate lower? For the record, the interest rate over in the United States, they are already sitting at a record low, meaning we have never, ever seen interest rate falling to this record level in the United States where they are currently. So this really shows that, okay, what the central bank can really do. The central bank cannot push the interest rate lower. But Let's just not make it too complicated. Let's go back to the stock market and then see where the opportunities are. So in terms of opportunities, keep an eye on the FANG stocks, your Facebook, Amazon, Apple, Microsoft. Why? Because US lawmakers, they have proposed this another proposal where they wanted to break up the big tech companies because they believe they control too much data, they control too much power. So if that happens, obviously there would be a substantial breakage of business between these bigger companies. So this is the reason that yesterday we saw the Nasdaq index falling. But remember, these companies are still very much strong. And I'm speaking of Amazon, Facebook, Microsoft, Apple. So any weakness that we see could be an opportunity, because during this entire coronavirus stock market rally, it was your tech stock which really produced this humongous rally for the US stock market, and of course over in Europe as well. So let's keep an eye on that. To finally finish off, gold prices are trading below that critical level of 1900. Today, expect higher volatility because the FOMC meeting, which is due at 7 p.m. British Standard Time, is likely to bring enormous amount of volatility, meaning more up and down moves for gold prices. And that is an opportunity for you guys as a traders and investors, because any up and massive downside moves gives you an opportunity to buy and sell within those zones. So for me, the immediate support level, the immediate buy level for gold price remains at 1850. 1900 to 1910 or 20 is the area where investors start to take some profit off the table, and that is pretty much their focus. But overall, the trend for a gold price remains to the upside. That's all for today. See you guys next time.